Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning and welcome to Bazaar Morning Call. I am Anuj, with me Sonia and Surabhi, and of course today is going to be an interesting day for individual stocks. Lots of earnings reaction. We'll discuss all of that, especially in the mid-cap space. On the index perhaps, once again we'll have to perhaps bide our time. Good morning, both of you.
Hi, good morning,
Good morning, Anuj. Good morning, Sonia.
Hi, morning. So we've been hitting new highs, but at a really slow pace, which is not a bad thing, right? I mean, consolidation after a big rally is, I guess, healthy for the markets. So is it going to be a day when, although we might be inching forward, it'll be more stock specific, you think?
Yeah, I think so. I think we'll discuss, for example, the likes of SRF and others, but on the Nifty, I think there's a bit of a fatigue. Fatigue might be a strong word right now because only 2 days. Might be just a bit of rest at 11,430. Sonia, let's see. The texture is firmly buy on dips. 3 or 4 days back, you could have chased this market and made money. Yesterday, if you had chased, you would have actually lost. For last 2 days, the opening is the high point for the Nifty. So let's see. The Bank Nifty is very close to 28,000. There's been some bit of congestion at 28,000. Normally, Wednesday sometimes is a big day for Bank Nifty because Thursday is the options expiry day, and on options expiry day, normally the Bank Nifty does not move much. It's about eating the option premium. So the big moves on Bank Nifty normally happen on a Wednesday. So I think today we'll find out. Over the last 2 or 3 days, interestingly, you know, we saw corporate banks doing well till about yesterday. Yesterday with PNB's numbers, we saw all of that, you know, reversing. And once again, Kotak and HDFC Bank doing well. So let's see. I think today would be about a lot of individual stocks. Mid-caps yesterday showed first chink of, you know, first sign of some kind of chink. I think I'll watch out for the day today. Yesterday, advanced decline started well above 2:1 or 3:1 and ended in favor of declines. That is one key internal to, I think, monitor from here on right now.
Okay. Anuj, morning, of course, we will also talk about another Q, which is the monthly inflow data. That we'll spend some time on that in a bit. But just your thoughts further on mid-caps, because so far, I mean, we were, celebrating the fact that at least the rally seems to be broadening. How does that part of the market look now? You know,
one thing which clearly stands out is, and we'll discuss this in top 10 as well, a lot of Nifty junior stocks are hitting new high, and a lot of non-index large caps, for example, Bata has hit new high. So that way, I think there's a lot of good stocks doing well, but small caps is one area where you would still want to just stay away for a bit because this rally sometimes, you know, looks too good to be true in a lot of individual stocks. So I'll keep an eye on that. Yesterday, the way PNB, for example, fell about 9-10%, it just tells you the kind of risk that is involved in chasing high beta stocks. You're better off in low beta in this environment. As I said, for me, the earnings reaction would be important. We know SRF came out with good numbers, so let's see how the market reacts because it's rallied from 1,500 to 1,800, though well off its highs. Emphasis normally reacts violently to earnings, so does Adani Enterprises. Let's watch for these earnings reaction and then see how things move. But risk management is important right now, and I think the market's given you enough message in terms of what kind of stocks the market is interested in. Perhaps non-index large caps, good quality mid caps. Still not a good time to go largely into small caps. I mean, just look at, for example, what happened within HEG or Graphite even after the earnings. So there's a bit of a risk in chasing some of these stocks.
Oh, absolutely, better to stick to quality names, I guess. In that context, even some of these stocks like Edelweiss might be in focus, right? I mean, decent set of numbers coming in, and these have been stocks that have been the darlings of the market for last many weeks and months. So let's see how that shapes up. But let's kickstart the show on that note. We have lots to talk about, especially the mutual fund data that has been a bit sticky and a bit disconcerting as well. Here's what our wise experts have to say as we head into trade this Wednesday morning. Sean Darby of Jefferies says investors face much greater single stock issues than before, and the concentration of ownership in FANG stocks and other financial acronyms are more influenced by global capital flows than a judgment call necessarily on the US economy. He says the bottom line is that global equity markets have been remarkably well behaved given the confluence of factors that in the past has upset absolute returns. He says the biggest backstop has been zero US real interest rates. Sean adds, within country allocations, they are mildly bearish on Indian equities at the moment.
Okay, let's get you some money market views as well. Pramit Brahmbhatt of Veracity says the rupee will trade sideways in today's session. He expects the spot USD INR to trade in a range of 68.5 to 69.
And Dhaval Dalal of Edelweiss expects the 10-year benchmark bond yield to remain in a range of 7.7 to 7.85% in the near term. He says a sustained break below 7.7 will open up the possibility of 7.5 in the very medium term.
All right, and now let's take a look at what's happening in markets around the world. It's over to Nigel for the world view.
Well, the US markets ended well in the green. In fact, the Dow put on close to around 0.5% odd. The Nasdaq as well was doing quite well. If you're looking at it from the all-time highs, well, those markets are almost at all-time highs. The S&P 500, in fact, is just 0.5% away from those levels, while you have the Nasdaq that's up close to, that's only 1% away odd. In yesterday's trading session, well, if you look at the Dow, there was one big winner and there was one big loser. So in terms of a loser, Disney came out with its set of numbers. It did see some profit booking, though the stock ended off the low point of the day. And Caterpillar, that was the big winner yesterday, was up close to around 2% odd. But clearly the stock in focus was Tesla. Remember, we had a tweet coming out from Elon Musk saying that, yes, he's looking to take it private. And in fact, that stock ended with a gain of close to around 10% in yesterday's trading session. No worries in terms of the European markets. You had the CAC, the DAX, and the FTSE. All of them did well. A couple of earnings that came out looked very, very good. So Schaeffler came out at set of numbers, got a thumbs up. Standard Life, Aberdeen, that set of numbers as well look good. And though Commerce Bank's numbers look good, the stock ended with a cut of around 2%. This morning, we're reacting to some data points. For Japan, the unadjusted current account surplus, that came in better than expected. But keep an eye out on Chinese data as well. They've recorded their first current account deficit in many, many years. So that's another factor that's playing out there. Asian markets more or less flattish. They were mixed to start trade, while the SGX Nifty is indicating a more or less flattish start. Back to you all.
Okay, thanks a lot for that, Nigel. But let's talk about the big story now. If you look at the mutual fund data that came in for the month of July, the MF inflows are actually down by 69% month on month. And this is the second consecutive month of a sharp decline that we've seen in MF flows. So we track this data very closely. Generally this kind of data is volatile, but now second month that we're seeing a decline.
Well, actually not just second month, Sonia, it's the last several months. I mean, in a very steady fashion, we've come down from the highs of around 20,000 crore rupees a month to now very paltry numbers. We're talking, less than 10,000 crores coming into the market. People are going to dissect this data very, very differently. Each one cuts it the way they want to. Some people will include ETF flows. Some people will not include balance. I keep it really simple. You should look at pure equity flows. We must look at the ELSS flows, and that continues to be a silver lining because SIP flows are sticky. There is no taking away from that. Even month on month, SIP flows have increased 8.5%. Now, the question is ETFs, equity ETFs. Should you include them, not include them? That's the lumpy number, which is why you've seen a 70% odd decline if you see month on month. Last month, there was a big chunky inflow thanks to the Bharat 22 ETF that came in that pulled up the headline number. This month, there are outflows, ETF outflows to the extent of almost 4,000 crores. That puts a question mark for me anyway on the kind of money we're getting in these PSU ETFs. So that money is moved out, which is why your headline number is looking so paltry. Even if I look at pure equity flows, well, we are at 8,500. We were about 8,800 in the month of June. I mean, Anuj, Sonia, whichever way you cut it, the way I look at it, people can choose to dissect this data and try and pull out strings. The fact is, flows are tapering off. Yeah. My question is that the market sentiment improved over July. Yes. Typically, these things turn when the market sentiment turns. Yes. So this is data in hindsight. Yes. How much we should be worried about it is a different question. But numbers are sobering. There's no taking away.
Yeah, that's a bit of a lagging indicator for sure. ETF also sometimes, are like, stocks. You're getting a discount. You buy, for example, there's a junior ETF. All of a sudden, there's a big decline in the market. You buy it. And then,
and there's redemption.
In a matter of 2 weeks or so, for example, the Nifty Junior ETF went up 10%. So there's temptation to withdraw it as well. So obviously, also on this equities, a lot of people would have withdrawn equity inflows, but would have kept their SIPs intact.
Absolutely.
Because the lower NAVs would mean that your SIPs would get more units. But because you're concerned about the market, you may want to withdraw. Your last 3 or 4 years, if you've been consistently, putting money and your NAV is still up about 50-60%, you would want to just withdraw that money, lock it in, and at the same time continue your SIP. I think that's my reading. But let's ask A. Balasubramanian, the chairman of MP and CEO of Aditya Birla Sun Life AMC. Bala, good morning. You would have heard Surbhi's analysis of the numbers. I wanted your take on the fund numbers. Is it something to get worried about or not quite?
Yeah, I think I just saw the analysis data that you had just done. Clearly, the industry is segregating the numbers into 3 parts. One, the money that flows into the actively managed funds, which includes balance fund. And second is the arbitrage fund. And third is the ETF flows. The number what you talked about, 8,500 crores, that of course inclusive of arbitrage fund, but the flow that comes into the actively managed equity funds. The way one has to look at the last few years have been, of course, good year, and the last 3 months have been relatively weaker market sentiment, as well as we have seen the flows getting a bit reduced. But there's one thing which has remained constant, of course, is the flows into the mutual funds have been incrementally positive. And second is SIP registrations, of course, has been growing continuously. And third is the new investors who comes into the mutual funds, which again reflects on the folios. I think if you have seen the number of folios added for the month of July also continues to remain robust. But having said that, at any point of time, we have seen historically, whenever the market either goes into flat or the sentiment is relatively weaker, we do see the flows into the mutual funds getting tampered off. But unlike the past, where we see a significant change in the trend, while there is a slowdown, but the incremental flows in equity would continue to remain somewhere in the range of 9 to 10,000 crores kind of number. I think as we see the sentiment improving, maybe we could see only this run rate per month, which generally we look at for the industry as a whole, could only get better, given the fact a lot of messaging that is going in, both at the industry level as well as the individual players level, that equity investing is for long term, not for 1 month, 3 months, 6 months, or 1 year, 3 years. And therefore, that messaging also ultimately will increase the holding period for the investors. That's where we see it.
So, Bala, I take your point. You're saying that in the medium term, I think you said 9,000 to 10,000 crores a month is a sustainable number. That's half of where we were at the peak. I just want to understand one thing. The inflows coming into balanced funds have dwindled so sharply in the last 6 months since this dividend tax came into being. It's down to a triple-digit number. I mean, we're looking at some 900-odd crores. This used to be a massive number in balanced flows. Where has that money gone? I mean, that's clearly not getting plowed back into the pure equity side of the market. How should we account for it?
Yeah, and again, it's a good observation. I think the peak number that we saw, I think we should look at it from the post-demonetization. There is a huge shift towards alternate asset class, and mutual fund was one of the beneficiaries around that point of time. And second is a lot of people are actually migrating from fixed deposits into the balance fund as a category on expectation of dividend, etc. So that segment obviously is it will get reduced post the introduction of dividend distribution tax. At the same time, as I mentioned that. While we could see a marginal dip in actually the balance fund, we have seen phenomenal growth in the last few years, especially the balance fund as a category. Therefore, it's not a worrying factor if there is a bit of slowdown in the flows in the balance fund. I think one has to look at it, the pure equity, how the flow is coming. And the SIPs are generally getting registered mostly in the actively managed equity funds. And which is, I think, is the sustainable the trend for the industry. That as your SIP book size keeps rising for the industry as a whole, I think clearly you will see the sustainable flows staying for long actually.
So what percentage of the net inflows into equity mutual funds will come from SIPs, say over the next couple of months? Because we were speaking to Sandeep Sikka yesterday, and he did indicate that now 1/3 of the money that goes into mutual funds comes in through the SIP route. This month as well, we've seen about an 8.5% rise on a month-on-month basis in the SIP flows. What is your prognosis on how it will shape up from here?
Yeah, I think the SIP flows as a percentage of equity net flows, that proportion now keeps rising. Today, the whole industry would be having about 23% of the assets under management, anywhere between 23 to 25% of the assets under management, close to about 9 lakh crore, coming from SIP flows, which is again a good, healthy trend. And second is incremental flow that we are saying, as it is the slowdown that we are witnessing is largely coming on the back of lump sum flows getting reduced and mostly getting shifted towards SIP. I would assume instead of 1/3, it could even become half of the flows would come through the SIPs. The current run rate on SIPs is close to about 7,000 odd crores as of now. And this number, I would assume, will only keep rising. By the end of the year, I would not be surprised if the number goes close to about 9 to 10,000 crores.
Okay, Bala, we'll leave it at that. Thanks so much for joining us. So not too worried about the slowdown that we've seen in terms of the flows coming in. He expects them to resume the upside. So this time, 8,500 crores is what we've seen, but he expects a range of 9 to 10,000 crores to resume very shortly. Lots to focus on this morning. The SGX Nifty is absolutely quiet. Looks like we could be headed for some consolidation, but then we've had a really good run over the last many days. Here's our entire team to tell you about the list of top 10 stocks to watch for the trading day. Anuj, what are you looking at today?
So again, Sonia, keeping it simple, the non-index large caps making new highs. Bata made a fresh all-time high yesterday, and delivery volumes more than doubled in case of Bata. It's been a remarkable stock, of course. And the other remarkable stock making a massive comeback is Exide. Again, a lifetime high yesterday. It's in a bull market of its own. I think 2 quarters back that things turned around for Exide. And, you know, we all remember how we used to make comparisons between Exide and Amara Raja when Amara Raja's market cap went above Exide. Now Exide's market cap is almost approaching double of Amara Raja. It's been that kind of stunning run for Exide. So that would be a stock to track.
Okay, Exide on our radar today. Novelis' numbers came out, Nigel, overnight. How did they look?
Well, you got some feelers yesterday when Alaris came out with its set of numbers, and Novelis' numbers look very, very strong. If you just take a look at the top line, there was a growth of around 16%. The shipments were up by close to around 2%. But you're always looking at the adjusted EBITDA per ton. And that looks splendid. It was more than $400 on a per ton basis. That's the best number we've seen in nearly around 5 years odd. Remember, there was a bit of a tailwind because of the spread between scrap and metal prices. So that's something that worked in that favor. You had a bit of a lag in terms of metal prices. That as well worked in their favor. But they lost out on volumes in Brazil and North America. And in spite of that, we had more than $400 per ton. So that clearly gets a thumbs up. The auto segment now contributes 19%, a shade below that targeted 20% odd. So things are good on the whole. Edelweiss buy rating on the stock, target price of 280 rupees. The stock should open up in the green.
Okay, should open up in the green, Nigel. Thanks a lot for that. Rima, what about Emphasis?
Well, Anuj, nothing much in the numbers. The revenue growth was a bit muted. The margins and profits have come in line with expectation. Just to dwell a little bit more on the revenue front, on a constant currency basis, their growth has come in at 0.4%. There were a few one-offs in the prior quarter, so on an adjusted basis, their constant currency growth at 1.1% is lower than the recent run rate of Emphasis. So on that parameter, it's a bit disappointing. Margins have declined by 20 basis points to 16.6%, but it's still at the closer to the upper end of the company's guided band of 15 to 17%. Profits higher by 8.5% in line with expectations. The board has also approved a buyback. So the buyback size is 988 crore. It's a tender buyback. The maximum price is at 1350 rupees per share. So about a 13% premium to where the stock closed yesterday, and the promoters will participate. So nothing in the numbers, maybe a bit disappointing on the revenues, but the kicker could be on the back of the buyback.
Okay, thanks a lot for that. That's Emphasis. It hasn't done much actually in the last couple of months. It has been on the upside, but about 7-10% is the kind of rally it's seen over the last 1 month or so. But Adani Enterprises, it was a weak showing. Revenues were down, profits were down. Anisha, tell us more.
Oh, well, yes, the stock went weak into the numbers yesterday. In fact, the entire group stocks were weak. And we know the reason why now, because as you mentioned, the revenue declined and came in at 8,000 crores versus an IDFC estimate of around 9,500 odd crores. And the reason was because the coal trading volumes were low at 11 million metric ton versus an expectation of 17 million metric ton. The margins at 6% are also lower than estimates. And look at the profit figure, just a paltry 80 crore numbers versus an IDFC estimate of around 290 crores. So disappointment coming on Adani Enterprise. They expect a red on that one.
Okay, expect red on that one. Of course, you can't short it today though. It's in F&O ban now. Abhishek, what about Edelweiss?
Well, Anuj, Edelweiss results are weaker than estimates, or weaker growth in this quarter compared to the previous quarter. The top line has grown, consolidated top line has grown by 19% as against earlier 25 to 30%. The profit after tax has grown at just 15% versus 50% plus earlier. The net profit has grown at 30% versus 40% plus earlier. So the life insurance loss has widened to 80 crores versus 43 crore on a YY basis. The capital market is the weaker point. The revenue growth over there being just 20%, but the profit growth at just 12.5%. Back to you.
Okay, well, one of the stocks of the morning could be SRF on the back of very good set of numbers. But do remember, the stock has rallied over the past few months. Sonal is here to tell us how the numbers look this quarter around. Sonal.
Very strong set of numbers coming in, Sonia. Overall, the revenues increased by around 40% at 1,423 crore rupees. EBITDA also increased by around 57%. Profits also grew by around 25%. The growth was led by both chemicals and packaging films business. The technical textile biz did well, but it was quite flattish on a year-on-year basis. For packaging films business, the revenue was up 69% and EBIT was up around 166%. Management had guided in previous quarter that this particular segment will do well going ahead. And chemicals business revenue was also up 40% and EBIT was up around 32%. Expect that stock to do well today.
Okay, Sonal, thanks a lot for that. Last quarter was disastrous for SRF, at least from market's reaction point of view, and the stock had that massive correction. Today, of course, could be some recovery. But Anisha, what about Kalpataru Power?
Well, the numbers were mixed, actually a tad bit weak, because the revenue growth came in at 10% versus our expectation of a 15% growth. Though the management says that on a like-to-like basis, the growth was around 16%. The profit came in at around 70 crores versus expectation of 80 crore. And the balance sheet of the company has actually worsened because the net debt stood at around 1,030 crores versus 690 crores at the end of the quarter. Though the management pointed out that that was a one-off and it is expected to come down. And in the July figure, it is down to around 850 crores. The order inflows were steady, but given that there is no fireworks in the numbers, we might see a bit of red tick.
Okay, all right, Anisha, thanks for that. Kalpataru, a bit in the red, perhaps. We've got lots of other numbers also to round up. Sonal is back to do just that. Sonal?
Well, I'll start with GAIL. That has some positive news coming in for the company. Well, Gujarat High Court has passed an order in favor of GAIL where they don't have to pay sales tax on interstate supply of natural gas, and the total amount involved was around 5,000 crores. So that comes as a relief for GAIL. GOCL also has a positive news as the subsidiary has bagged an order worth 204 crore rupees. So that sounds positive for the company. Now some earnings. Inox Wind has reported good set of numbers. The consolidated revenue has come in at 430 crore rupees versus 106 crore rupees on a YOY basis. Even the commentary is very strong from the management side. Expect that stock to do well in trade today. Sri Pushkar Chemicals reported strong set of numbers. The profits have come in higher by 30% on a YOY basis. Dhampur Sugar has posted weak numbers on a YOY basis, but sequentially there's some improvement. But on a YOY basis, profits are down around 50%. PNC has reported good set of numbers. The EBITDA, that has gone up by 150%. Even the margins, they have seen quite a lot of expansion. Expect that stock to do well in trade today.
Okay, so those are a couple of stocks to focus on this morning. But moving on, Goa's Chief Minister Manohar Parrikar met a group of ministers to discuss ways to revive the mining industry in his state. Anshu Sharma, who was at that meeting, filed this report. Take a look.
Chief Minister Manohar Parrikar met Prime Minister Narendra Modi, and then he was asked by the Prime Minister to present Goa's mining issues with the group of ministers which comprised of Road and Transport Minister Nitin Gadkari, Mines Minister Narendra Singh Tomar and Law Minister Ravi Shankar Prasad. After the meeting, Chief Minister Manohar Parrikar said that the government will look at legal options as to how to begin operations in the state of Goa. Remember, Goa produces low-grade iron ore which are exported, and this is the second time that mining has been banned after Supreme Court directed that all mineral has to be auctioned, and in Goa these mining leases were approved just before the MMDR Act of 2015 was passed on January 12, 2015. So what we understand from sources in the ministry is that it will be tough to see how legally government can approve these mining leases and begin operations in Goa, but they are not ruling out that some legal options will be deliberated upon by the Law Ministry, and group of ministers will meet again.
Okay, well, let's do a quick recap then of our top stocks to watch today. Stocks with positive news flow: Bata, Exide, stocks hitting new highs; Hindalco, Vedanta, Emphasis, SRF, the stock of the day; Gale, Gulf Oil, Inox Wind, Sri Pushkar Chemicals and PNC Infra. While stocks with negative news flow: Adani Enterprises, Edelweiss, Kalpataru Power and Dhampur Sugar.
Okay, those are our stocks on the radar. You can perhaps add all the multiplex stocks to that list as well, because maybe we get to know whether the popcorn and the coffee and the food gets cheaper or not at multiplexes today. There's an important court case coming up. Mangalam.
That's right, Surbhi. You know, so not sure whether this the news flow will be positive or negative, but the Bombay High Court is slated to hear the case with regards to allowing outside food and beverages inside the theatres today. Remember, this is important because there are arguments in favor of both the sides. The first one, of course, is the high price that they charge for food and beverages. The second one is the right to business, and a lot of the security angle has come in as well. This is in favor of the multiplexes. So it will be very interesting to see. Will be perhaps like a blockbuster. Why is this important? Because 25 to 30% of the revenues for multiplexes come from food and beverages. More importantly, 35 to 40% of their EBITDA does come by from there. Ever since this news flow came by on July 13th, the stocks have corrected adversely. We've seen corrections of almost 10 to 13% on both Inox and PVR. So it will be very interesting to see what happens. More importantly, will there be a verdict out today or not?
Okay, that's going to be interesting to watch out for, of course. You know, there's an interesting thing which has happened over the last 3 or 4 months, which PVR and Inox have, you know, done. Now you can go to PVR and Inox and not watch a movie, and you know, just consume their snacks. They've also bought a couple of snacks brand. PVR has that popcorn brand. So in a way, what they're trying to say is that, you know, look, if you're allowing outside food now here, in that case, you should allow outside food to any restaurant, because we are now a bit of a restaurant as well. So I think it's going to be really fascinating going forward.